Kyle, is that still, it's still showing 14:59 for me. Is that accurate?
Yep, I didn't hit play on that yet.
Oh,
I'm going to mute myself now because we're going live.
awesome. Me too.
Hello everyone, my name is Kyle Timms. I'm the creative content manager here at DLP Real Estate Capital, and I wanted to take a moment just to do a brief tutorial on some of the functionality that you'll experience tonight in our Zoom virtual dinner. So as you can see, this is what the Zoom interface looks like. The first thing I wanted to show you is our chat function. And one thing that I'll preface this by saying is that our chat is going to be turned off for most of the presentation. And then when we get to the end for Don's Q&A, we're going to open up that chat so everyone can interact and ask questions. So when that time comes, you're going to hit this little chat button here at the bottom. And then on the right-hand side, the chat box shows up. Right here, you can type your message. You can say, "Hey, Don, how are you?" And that'll go to everyone, and we'll be able to have Don answer your question live. The other thing that we're gonna be doing is polls. We're gonna have polls throughout the evening to help increase interactivity and kind of get your some questions out there to you guys. So this is what that's going to look like. We're going to launch a poll, and then it'll show up. It'll come right there on your screen. And the question, this one says, "Can you see this poll question?" And yes, I can see this poll question. So you hit submit, and then now that goes away. So now you can get back to enjoying the presentation. And then a little bit later in that presentation, we're going to share the results, and then it'll pop up again, and you'll see, can you see this poll question? One respondent answered yes, so 100% of the respondents said yes. So that'll get, you'll be able to see right there what everyone answered. So you'll close that. And that's just a couple of the fun functionalities here of Zoom and some of the things we're doing to help make this DLP virtual dinner a success. So we are so looking forward to seeing you at 6 o'clock. Have a great night. wanted to take a moment just to do a brief tutorial on some of the functionality that you'll experience tonight in our Zoom virtual dinner. So as you can see, this is what the Zoom interface looks like. The first thing I wanted to show you is our chat function. And one thing that I'll preface this by saying is that our chat is going to be turned off for most of the presentation. And then when we get to the end for Don's Q&A, we're going to open up that chat so everyone can interact and ask questions. So when that time comes, you're going to hit this little chat button here at the bottom. And then on the right-hand side, the chat box shows up. Right here, you can type your message. You can say, "Hey, Don, how are you?" And that'll go to everyone, and we'll be able to have Don answer your question live. The other thing that we're gonna be doing is polls. We're gonna have polls throughout the evening to help increase interactivity and kind of get your some questions out there to you guys. So this is what that's going to look like. We're going to launch a poll, and then it'll show up. It'll come right there on your screen. And the question, this one says, "Can you see this poll question?" And yes, I can see this poll question. So you hit submit, and then now that goes away. So now you can get back to enjoying the presentation. And then a little bit later in that presentation, we're going to share the results, and that'll pop up again. And you'll see, can you see this poll question? One respondent answered yes. So 100% of the respondents said yes. So that'll get, you'll be able to see right there what everyone answered. So you'll close that. And that's just a couple of the fun functionalities here of Zoom and some of the things we're doing to help make this DLP virtual dinner a success. So we are so looking forward to seeing you at 6 o'clock. Have a great night. Hello everyone, my name is Kyle Timms. I'm the creative content manager here at DLP Real Estate Capital, and I wanted to take a moment just to do a brief tutorial on some of the functionality that you'll experience tonight in our Zoom virtual dinner. So as you can see, this is what the Zoom interface looks like. The first thing I wanted to show you is our chat function. And one thing that I'll preface this by saying is that our chat is going to be turned off for most of the presentation. And then when we get to the end for Don's Q&A, we're going to open up that chat so everyone can interact and ask questions. So when that time comes, you're going to hit this little chat button here at the bottom. And then on the right-hand side, the chat box shows up. Right here, you can type your message. You can say, "Hey, Don, how are you?" and that'll go to everyone, and we'll be able to have Don answer your question live. The other thing that we're gonna be doing is polls. We're gonna have polls throughout the evening to help increase interactivity and kind of get your some questions out there to you guys. So this is what that's going to look like. We're going to launch a poll, and then it'll show up. It'll come right there on your screen. And the question, this one says, can you see this poll question? And yes, I can see this poll question. So you hit submit, and then now that goes away. So now you can get back to enjoying the presentation. And then a little bit later in that presentation, we're going to share the results, and then it'll pop up again. And you'll see, can you see this poll question? One respondent answered yes. So 100% of the respondents said yes. So that'll get, you'll be able to see right there what everyone answered. So you'll close that. And that's just a couple of the fun functionalities here of Zoom and some of the things we're doing to help make this DLP virtual dinner a success. So we are so looking forward to seeing you at 6 o'clock. Have a great night.
You are getting roll.
They took it all.
I get that.
They took it all off.
All different kinds of things on time. Let me go.
Hold on.
Looks like they probably muted everybody.
Investors, DLP team members, and just all of you that have joined us here tonight. We're sorry we can't be with you in person. We are very, very happy that you joined us here this evening. If you've received your gift for dinner tonight, we hope you're enjoying it. You can see some of our goodies back here. But everyone who's registered, don't worry, you did get one, and if it hasn't arrived yet, it will be there to you shortly within the next couple of days. So we hope you enjoy that from us. So before we get started, I'd like to introduce the man I'm sitting next to here, our founder and CEO, Don Wenner, our founder of our DLP Real Estate Capital family of companies. So Don, of course, has done over 14,000 real estate transactions totaling over $3 billion. We own over 10,000 units in our portfolio. And Don, among other things, has been nominated and won several awards over the last several years, all to the testament of his leadership of our family of companies here. So without further ado, I'd like to go ahead and introduce our founder and CEO, Don Wenner.
Awesome. Thank you, Larry. What a pleasure to be here with everybody tonight. Hopefully you've been able to scroll through some of these videos as we have, and hopefully my children are not too distracting. I saw them with my wife, Carla, so hopefully they're not too distracting for you, but I encourage you, if you can, throw on your video, join us here in the dinner party tonight. And before we dive in and really kick off this dinner here tonight, we wanted to take a moment to thank you. Thank those of you who've been out there, you know, in the medical field, out there on the front line, out there in grocery stores, to DLP team members out there on the front line, working with our residents, putting yourselves in harm's way, taking, you know, risk and dealing with the kind of unknown, to be out there to serve all of us. And for those of you who've taken that moment to take a break, to join us here tonight, spend a little time being a part of this event with us, we really want to thank you. And we're going to play a quick little video as our way of saying thank you.
Hi everyone, welcome back to our channel. So today's video is dedicated to our essential workers. We know that going out on the front line cannot be easy, and we wanted to say that we cannot thank you enough for your bravery. From our valued frontline workers in the Sierra Vista Fire Department in Arizona, to our healthcare workers in the CAMC Healthcare Network in West Virginia. We have hundreds of residents across the country on the front lines, and we thank you. We see you and we appreciate you, not only today, but always. Firefighters, police officers, healthcare workers, grocery store workers, pilots, bus drivers, pharmacists, those who work in a bank, those who work in the hotel industry, those who work in the apartment industry, those who work in the food industry, and so many more. If you are an essential worker, this video of thanks is dedicated to you.
Awesome. So in addition to thanking our essential workers here, we also want to take a moment to thank our investors. A pleasure seeing literally hundreds here with us tonight, and I want to thank you for your support, especially through these crazy last few weeks we've all been living through. So we want to take a moment. If you have your wine here with us or anything in your hand, take a toast to our investors. Cheers.
Cheers. Excellent. Well, again, thank you all so much. We put together an amazing evening here for you tonight. We're going to be bringing to life everything we do here at DLP. You're going to see firsthand how our companies work together for your benefit. Before we get started, though, I know that a lot of folks like to remind us of this, that we are going to be having a raffle at the end of the presentation tonight. Have to be present to win, so stick around. But we are going to be raffling off a weekend getaway to one of our awesome luxury vacation properties in St. Augustine, Florida, St. Simon's Island, Georgia, or beautiful Asheville, North Carolina. So good luck on that. We'll be drawing for both a future investor and an existing investor. So can't wait for that. So Don, before we get into each individual company, I'd love for you to talk a little bit about where we are today for DLP Real Estate Capital as a whole.
Yeah, thank you, Larry. Love to do so. So we'll tell you a little bit about our story, as Larry said, and how we got to where we are. But today here at DLP, I'm proud to say we're 300 plus team members strong, having grown substantially over these past 14 years now. And our parent business today is DLP Real Estate Capital, and that's the parent company behind all the DLP businesses, from DLP Realty to DLP Capital Partners, to our lending business, to real estate management, to Bright Homes. You're going to hear about all these businesses here tonight. Over 300 team members led by an amazing team, about 25 senior executives you can see on the screen here, some of which Larry's sitting right next to me. You'll meet Rich here in a moment. You'll meet Warren tonight. You'll meet Melanie tonight. You'll meet many of these great leaders here tonight who drive results each and every day and have stepped up to the challenge over these last number of weeks and have helped us here over many years. You know, not all those pretty faces were here with us 14 years ago. We've added and built that amazing team, grown our organization to over 300 team members, over 14 years here now. And over these past 14 years, we've grown by at least 60% every single year. In fact, we've made the Inc. 5000 list now for 8 straight years. Measuring our growth over a 3-year period of time, we've been growing by 300 to 600% over every 3-year period for 14 years. We're the 5th fastest growing company in America out of any companies who've made this list for 5 or more times. Our 8th straight year of consistent growth through multiple real estate cycles now. That growth has continued here recently. We were just named a few weeks ago by Financial Times as the 142nd fastest growing company in the Americas, ahead of Uber, ahead of Tesla, ahead of Netflix. We grew by 473% in the past 3 years alone. And that growth has continued and will continue through the amazing team members here that in the organization we've been able to build, focused around our mission here, focused around our purpose of passionately creating prosperity through real estate. We've had a mission here of leading and inspiring the building of wealth and prosperity with our partners, and that's you as our investors, through the relentless execution of innovative real estate solutions. You're going to see and hear about some of those solutions here tonight. And we've done this by keeping our 10 core values you can see on the screen here live in each and every person in the organization. You're going to get to meet many of these people here tonight. And I know many of our existing investors have had the pleasure of meeting many of our team members over the years, and many of them are here with their smiling faces and video, a part of this event right with us here. And what you're going to realize as you get to know myself and Larry and our great team members here is they exude these core values, and never been more important for us to live our core value of stewardship through these challenging times of the last 6-7 weeks now. Our core value of the 20-mile march, which many of you have heard me talk about this story, but for those of you who haven't, 20-mile march is about the ability to generate massive, consistent results day in and day out, even in spite of chaos, even in uncertainty, even in times of pandemics. And you're going to hear a bit about how we've been able to do that here over the last 6-7 weeks, and why we're so confident, why we're thriving, through everything that's going on around us here right now in the world, and what's ahead here for DLP.
Awesome. And I don't know if I can name anybody that could be better suited to explain that in a little more detail than our Chief Experience Officer, Patrick O'Donnell. So we're going to go ahead and hear some words from him now.
Hello everyone, I'm Patrick O'Donnell, Chief Experience Officer at DLP Real Estate Capital. And experience takes on 2 sides, the marketing side and the people side. For the marketing side, we want to make sure that the experience is absolutely outstanding for our investors and our future investors. And on the people side, we want to make sure that the experience is great for all of our team members as well, because those who are inspired and motivated are going to provide that outstanding service that we want to provide. And as we do, we want to make sure that we are thriving in all that we do. You've likely heard Don talk about what makes us so successful, right? And it's two things. We call it our people and our secret weapon. Our secret weapon is a 20-mile march. 20-Mile March comes from the Jim Collins book, Great by Choice, and based on a story from 1911 when two teams were racing to the South Pole. One team that marched every single day, 20 miles, regardless of the prevailing conditions on the way to the South Pole, got there first, 34 days before the other team, and made it back safely. The other team, sadly, did not make it back safely. Like the winning team, we continue to march forward day after day, regardless of the conditions in the marketplace. In fact, that's our theme for this quarter, the 20-mile march, thriving and driving productivity in times of uncertainty. How have we done this? First, on the marketing side, it's actually taking on things that can be done in a virtual world, being able to convert all of our meetings to Zoom, doing webinars, turning events into virtual dinner parties. So, hope you're enjoying it. The webinars had the highest attendance of all time and have led to record applications, investments, and contracts as we continue to bring in capital, fund loans, collect rent, and close transactions. And how's all that been possible? Remember the other side of the equation, our people. We want to make sure they have an outstanding experience as well. So for Q2, we actually implemented a contest that relates to our quarterly theme. And so the team member that saves the most money actually wins a week vacation at one of our DLP vacation properties. We've added morning workout sessions over Zoom and even energy boosting sessions. Regular communications go out to our team with all kinds of tips, from how to work at home productively with children to immune boosting tips. We've always done team huddles to start every day, and now they're more important than ever, with everyone on camera ready to start their day together. Our regular team huddles, meetings, and trainings covered successes that our team members enjoyed during this time. And we meet for meetings such as Driven for Greatness, where we all get together to discuss books that we've read, like Grit, that help us get better in all aspects of business and life. Here's what a few of our team members have said about why they love DLP and serving our investors.
We're really fortunate to have a wonderful group of investors who are not only incredibly interesting and kind, but they're also some of the most motivated and disciplined people that I have ever met. And I think that's really rare.
Being surrounded by such empowering and wonderful people, I just have the chance every day, the challenge as well, to expand myself personally, professionally, to reach my goals. And it's really just a contagious environment. Everybody's on the same page with that, and it overflows directly with the way we deal with our customers as well. And I love having the opportunity to help people actualize their goals and make some real estate investments.
I am truly honored to serve all of our team members and all of our clients. At DLP, we are dreaming big, we are living intentionally, and we are prospering because we are passionately and innovatively creating prosperity through real estate.
That is so true. Passionately creating prosperity through real estate. And we'll continue to do that day after day, regardless of the prevailing conditions. And as we do, if there is anything that we can do to make your experience even better, please let us know. Thank you so much, and enjoy the rest of your day.
Excellent. Thank you very much, Patrick, and welcome back, everyone. So again, you might be wondering, what happened, Larry? How'd you grow so much hair? But again, it's actually me, Rich Delgado, Managing Director of Capital Partners, changing in here with Larry. So first, want to start off with a quick poll. Again, the first of the night, this is going to be an easy one. Want to find out how many of you have ever bought or sold a home with DLP Realty. So again, if you can put your responses in there, we're going to move on, and then we'll get the answer to that towards the end of this segment. So want to start off, Don, just talk a little bit about, sort of how the company started. Very impressive, right? 14 years of just massive growth, built a great company, started off in realty, right? And again, many of us know the story of Eleanor. Would love to hear it, have our future investors hear the story. So if you don't mind, if you could tell us how it all started, we'd greatly appreciate it. Thanks.
Awesome. Thanks, Rich. And those of you who just joined us, I know we hit some Zoom meeting limits, but I know you just joined, but you're joining at a good time, because we're going to kind of tell you how everything that we do today, how it all began here. And it all began, as Rich said, when I was a bright-eyed college student at Drexel University in Philadelphia and living in the Lehigh Valley, and decided to get into real estate. And I set out with a focus of selling real estate. I became a real estate agent at Keller Williams Real Estate. And this was October 2006. And that was the peak of the real estate market. That's when markets started to turn, property values hit their high, homes started taking longer to sell. We had an oversupply issue and it wasn't so easy to sell your home anymore. And so from that very first day I entered real estate, my message was your home sold guaranteed or I'll buy it. And having a message like that in a time when the market's starting to slow down was an important message. And that was really the first of a focus of really shifting away risk from our clients and providing innovative solutions that could make it easier to achieve your goals. And that resonated with a lot of people. And many of you started hearing that on the radio and television and print and digital marketing. And it led to a lot of home sellers reaching out to us and led to a lot of people wanting us to take that risk away and selling their home. And that led to us selling a lot of homes. That led to us starting to invest and just step in and buy people's homes, such as, Eleanor, you mentioned, who was the first home I ever bought. So, Eleanor, and I've told this story, as Rich said in some of our previous dinners, but Eleanor was a lady who was moving in an assisted living facility and needed to sell her home. She'd owned for a long time. And I actually was a real estate agent representing an investor who was supposed to buy her home. And that investor, day of closing, couldn't get his loan. So he walked away and said he couldn't buy the home. And when I had to give Eleanor this news, I was the real estate agent, and she broke into tears and was so upset because she would lose the senior housing, assisted living home that she really needed to be in. So I kind of on the spur of the moment, I was literally sitting at a closing table directly across the street in the building across from our headquarters now in Bethlehem, Pennsylvania. And it hit me. I said, I'll buy her house. So I literally ran across the street to that PNC Bank, for those of you in Lehigh Valley, on Route 512. And I took out the money to buy her home, and it was $72,000. And that was pretty much the money I had in 2006. And I bought her home, and there's a little home in Catasauqua, and I bought it and I renovated it and I sold it. And that led me down the path of becoming a real estate investor. And, that led to, in 2008, growing to selling over 200 homes, helping more than 200 people sell their homes and buying 20 homes and renovating those homes and turning them back to new homeowners. In 2008, 12 years ago, we were a 10-person company. It was just DLP. It was just real estate sales, just home flipping, and we were a 10-person company. Many of those teamers, some of you are going to hear from tonight, still with us here to this day. Cindy Temple, you're going to hear from. Derek Antle, Trisha Bucci, great team members who've been driving results for us ever since. And we started growing that by 2009, a little over 10 years ago, we set out and left Keller Williams Real Estate and launched our own real estate brokerage called DLP Realty, of course. That year, we sold over 250 homes, and we flipped more than 40 homes, providing more than 40 new homes back to home buyers. And we had such great success in the Lehigh Valley in Pennsylvania that we decided to take that growth down here to Florida, where Rich and I and Larry are talking to you from here today. And we expanded into Florida. And this was the depths, if you remember, this was the depths of the last, big great recession. And we launched a short sale negotiation company, helping people who were upside down on their homes. And we continue to help more and more people sell their homes. We continue to invest more and flip more homes. And by 2010, 10 years ago, we grew to a company of 25 people. And, we're really on our path, though, of seeing big growth. We weren't maybe being recognized by the whole world back then at a 25-person company, but we're having the same kind of growth that we've had since then. And one of the cool things, with real estate sales being how it all started, in 2009, in our, really third year, we sold 250 homes that year. This past year, we sold 2,089 homes, nearly, 10 times growth. And in our 14th year here of home sales, we grew by over 70% last year alone, making us the 8th fastest growing real estate brokerage in America last year on our 14th year. We also were the 11th largest real estate team, most successful real estate team in the country. And you can see, many of the people we've represented in the sale of their home, many of the homes we've sold, some of the stories from our happy clients, more than 10,000 people we've been able to help sell their home, move into their new home. It's been really, really, really amazing. As you can see here again on the screen, number 8 fastest growing company in America. It was just a few weeks ago we were named that, and number 11th in all of America in terms of total sales, and number 1 in Pennsylvania and Jersey for 6 straight years. So we continue this focus as we've expanded, and you're going to hear more about into all of our other business lines that make up these investment strategies that generate all the returns that you're going to hear more about in the presentation here tonight.
Awesome. Well, thank you very much, Don. we want to take you and introduce Jonathan Campbell. Again, Jonathan is the president of our realty group. He is going to tell you a little bit more about how we're handling our current existing environment is selling homes. But quickly, we'll give you the results of the last poll. And again, it looks like we had 16% of the audience, which is great. Good start. We'd love to get more of you involved and have you look at us and come to us if you're ever looking to buy or sell a home. So remember DLP Realty. So with that, we'll turn it over to Jonathan and the realty team.
Good evening, fellow investors and prospective investors. At DLP Realty, we have shifted and we're creating the new normal in real estate. Hi, this is Jonathan Campbell, Vice President of Realty, coming to you from my home office. We realize that you can either sit on the sidelines and complain about our circumstances, or we can create solutions to the problem that everyone is facing and over-communicate with our consumers to bring them a level of comfort and understanding in today's changing market. We immediately took action and implemented virtual selling to all of our sales team, enabling them to help a buyer purchase a home online without even physically stepping into the home, given our mandates that we're currently in our state. We provide a 3D home tours, virtual meetings like the ones that we're on actually right now, and up to the minute information so you can pounce on the opportunity that they see in front of them. Buyers are still buying and sellers are still selling. But why listen to me? Let's hear from a few of our agents.
Hi, my name is Don Wenner, Sr., and I'm blessed to work on DLP Realty's inside sales team. I wanted to talk about the current market conditions we're in right now in our virtual market, as we call it. You know, we pride ourselves on finding solutions for people's real estate needs. And that doesn't matter if we're in a buyer's market, a seller's market, we're in the virtual market that we find ourselves now. We're able to adjust and adapt and really run with the market no matter what conditions are thrown at us. And I know that when the shutdown is over and things go back to a more fluid market, we'll roll with those changes too and be a stronger team and company and better for it. Thank you for watching.
So, as soon as the stay-at-home order was issued by the governor, I immediately contacted all of my clients. Sellers, asked them to do a video tour of their home, make it fun and lighthearted, and tell us specific things that they enjoyed about the home while living there. I was able to get 2 of my buyers under contract with a contingency of physically seeing the home. And it was all through virtual tours and the website, and of course with the help of the sellers and answering those questions that my buyers had.
Things are changing day by day, and there is not a one-size-fits-all solution to our clients' needs. We have stayed in hyper communication to provide unique answers and opportunities on an individual level.
Hi, I'm Laurie Nice with DLP Realty. These times have challenged all of us at DLP to think outside the box to keep our business thriving. I've gone virtual, connecting with clients and future clients using online services such as Zoom and FaceTime. It's like we're all sitting in their home. They walk me through it, I can see their whole home and property, and we could discuss any questions they might have. They send me a walkthrough video of their home so that we can get them listed in the MLS and get them sold. It truly works, and it's so exciting to be part of a solution-minded company like DLP Realty and help my clients live their dreams.
Excellent. Thank you, Jonathan, and the entire realty team. You know, very impressive to see, you know, the call to action. Everybody came in and stepped in and got really innovative in selling homes and continue to sell homes. So that said, we're going to go ahead and do our next poll. So want to find out if A, you currently own your own home, B, rent a home, or C, live with a family or friend. So again, submit your answers, and then we're going to transition here, Don, just talking about sort of, you know, realty and, you know, renovating single family homes. But today we sit up on top of a massive, you know, 10,000 plus multifamily and apartment home with many residents. Tell us the transition, how you got into multifamily.
Yeah, thanks, Rich. And as we talked about kind of in our initial years, it was helping people buy and sell homes, including ourselves. We were buying homes, renovating them, turning around and selling them. And when we hit the bottom of the market, which was around 2011, that's when real estate prices kind of hit their bottom. That's when we really realized it was time for us to grow a portfolio. It was a great time to buy. We had built our infrastructure and resources. And that's when we launched our own home construction side, DLP Builders. We started doing all of our renovations. We also started a little bit of new construction and being able to facilitate renovating more homes, because we knew if we were going to start building a portfolio, we needed more capacity. So then by 2012, we launched DLP Real Estate Management, which was our property management arm, starting to build a portfolio of rentals, building a portfolio of providing homes, great new renovated properties to residents. And in 2012 alone, we added over 400 single family and multifamily homes to our portfolio, really going from almost 0 to 400. We sold over 500 homes that year still in DLP Realty. So we continue to grow, and we continue to flip homes as well. We flipped over 60 homes that year as well. And that really led to our start of building a real portfolio. And from 2012, having 400, multifamily and single family homes, to now, as Rich said, in 2020, over 10,000. So that's in an 8-year time frame, 2,500 or so % growth in our portfolio. Here's some pictures of some of our great properties we own all over the country, in total of over 18 states. And I'm going to show you that on a map here in a moment. Whereas far west now, as you can see, as Utah, Oklahoma, and Arizona, whereas far north as South Bend, Indiana. Heavy percentage of our portfolio here in the South and Southeast, Florida, the Carolinas. And then, of course, you can't even see how many little markers there are in the Lehigh Valley because they all overlap, as we still, of course, have a tremendous portfolio in Lehigh Valley where we're headquartered. And, our growth in going into real estate management, which is maybe the most foundational business, managing, real estate, we've taken a very unique approach to it. And we've bringing a lot of innovation, different level of service and amenities and focus and way we provide housing to our residents. And that led us last year to being a finalist by the Institute of Real Estate Management for Corporate Innovation, and has led us to really provide a very different experience for our residents and in turn generate, pretty phenomenal returns for our properties and for our investors.
Excellent. So appreciate it. Thank you, Don. So with that, we're going to turn you over to the president of Real Estate Management, Melanie French, who's going to not only tell you a little bit about the properties we manage and the innovative solutions that we provide our residents and the amenities, but you'll hear from some of the frontline employees and the residents themselves. So we'll take it away. Thanks, Melanie.
Hi, I'm Melanie French, president of DLP Real Estate Management. We're so pleased that you were able to join us at this investor dinner tonight, and you are going to hear some terrific information. At DLP Real Estate Management, we take care of managing the multifamily and single family communities. We also conduct the asset management. And on top of that, we do construction and renovation and redevelopment. Those redevelopments help your invested dollars to go further and to continue to grow. In fact, I'd like for you to watch a short video about what it's like to work and to live at a DLP community.
Hi, I'm Christina, and I'm a leasing specialist for DLP. One of my favorite things about working for DLP is that I get to wake up every single morning excited about what I do and the opportunity that I have to make a difference. When I first learned about the opportunity here at DLP in one of our properties here in Titusville, Florida, I was excited to be part of this community and what DLP could bring and add value to Titusville as a whole. I'm a native here in Titusville, and the property that we're located at is truly such an innovative experience for our community and for anyone that comes to live here. Speaking of that, one of our other favorite things about DLP is the emphasis that we put on making our residents feel appreciated, valued, and excellent customer service. What our DLP residents experience, I believe, truly sets us apart in this industry. We deliver wow, we look for innovative opportunities to really go above and beyond, and we have a genuine approach that puts our residents' service needs first.
Hi, I'm Sabrina and I live in a DLP property. I enjoy coming home every day because the grounds are nice and clean The staff is attentive and extra nice to me. Whenever I see them in the community, they always greet me and ask if I need anything. I enjoy the pool area where I can invite my friends over. We can listen to some music, lay out, play in the pool if we need to. I can take my dog Gigi on a walk. We'll go to the dog park. She enjoys meeting other dogs there and playing. I really enjoyed living at my DLP property. It's the best place I've lived so far.
Hello, my name is Anson. I'm with the Titusville Yoga Loft here in Titusville. I'm really thankful that I have the opportunity to work with DLP. We bring more health and wellness to the community and to the residents. I'm really thankful that they support the community and small businesses. Thank you.
You know, it is so rewarding and self-gratifying to know that on a daily basis, we get to make a true impact on people's lives. Little things such as health and wellness, a true sense of community, excellent customer service, and sometimes just a smile and a hello. Again, I'm Christina. I love working for DLP, and I hope this gives you just a little glimpse of what it's like to be part of this community as well.
I hope that you enjoyed that short video highlighting some of the great aspects of our communities and working at DLP Real Estate Management. We truly do put the wow in service and help our residents to live prosperous, full lives. Thank you for being a part of that with us.
Excellent. Miss Melanie and the entire real estate management team, thank you for putting that wow out there. We appreciate it. So we're going to go ahead and check the results. 87% own your own home, 10% rent, and 3% still live with their family and friends. So when you're looking to rent an apartment or own your own home, don't forget DLP, right? Come to us. We can help you out in all respects. With that said, we're going to roll right into our next poll question. So with this, we want to know the name of the program sponsored by DLP Direct Lending Partners that assists our top operators from across the entire United States, all across America, scale and accelerate their business. Is it called DLP Rockstars, DLP Elite Partners, or DLP Fantastic Four? So again, give us your answers. We'll let you submit those and then we'll move on here. So again, we're going to talk about a little bit about lending now. This is an interesting transition now. You're operating at top scale, developing, you have multifamily units that you're operating, you have residents, and then you're now lending to other operators, that some of them which may be competitors. What led you to make that move into the lending side?
Yeah, thanks, Rich, and that's exactly right. So this was back in 2014, and at that point we had already renovated and purchased thousands of homes and apartments and built our business. We were over 100-person company and having great success and great growth, built a lot of knowledge. Not only a lot of knowledge in real estate, but we built a good amount of knowledge on how to grow a successful and profitable business. And we realized there were a lot of other good operators out there who had the same desire, who wanted to build a great business and needed access to capital and needed access to knowledge. And we saw that as one of the most amazing ways that we could really grow. We could deploy a lot more of our investor capital by being able to go out there and provide capital to great investors. So in 2014, we launched Direct Lending Partners. At the same time, we launched the DLP Lending Fund as well to fund those loans, to fund that growth. And really, that's when it all began. And on the screen here, you can see a lot of our other growth over the 2014-17 timeframe. And I'll cover a little bit more of that later. But in terms of lending, it was pretty tremendous growth. I mean, we've grown year over year, as you can see, from just getting started to $34 million in loans to then doing $100 million in loans in 2017, and expanding from just lending in Pennsylvania, New Jersey, and Florida to now lending in more than 30 states, from just lending to guys flipping homes to lending to guys also building homes, and lending to multifamily operators, and expanding, our product type and expanding our ability to grow and providing capital and knowledge to investors, including those educational programs. I won't give away the name, but the educational platform that we provide to really help operators scale and grow their businesses. And carrying into here the last few years, you can kind of see that the growth here. I mean, pretty amazing. In 2014, we did about $10 million in loans in our first year of getting started. And last year we did $340 million. That's 3,400% growth in 6 years. This year we're just knocking on the door. I think today we'll end up breaking that $100 million year-to-date mark. And this year I expect we'll fund over $500 million in loans, line of credits to borrowers, continuing to support, really great operators through this time frame. We've invested heavily in doing that. One of the unique things about us, our name is Direct Lending Partners. We're a direct lender. We work directly with operators, bringing them not only capital, but knowledge and resources. And we communicate directly with our borrowers, just as we do here with you as our capital investors. And Nate, our president, who you'll hear from in a moment, leads the way in a lot of that communication and guidance and education of our borrower base, helping them grow their businesses, and in turn helping us grow our business.
Excellent.
And before I turn it back over to Rich, cover a couple of quick case studies. So I want to show you a couple of examples of some of the actual loans we do, so you understand what we're doing. So we're not lending to people buying a home for themselves to live in. We're lending to successful real estate investors buying homes or multifamily properties as an investment, properties that they're buying to make a profit. These aren't distressed situations where the borrower is in need of money to pay their taxes. These are guys who are successful operators, on average worth over $3 million, who completed 25, 30, 40 investment deals with a lot of liquidity, a lot of experience, who need capital to grow that business. And a great example of this is right on the screen here. So CTV Capital, one of our borrowers, who's literally built and flipped over 200 homes. One of our borrowers we've done a lot of funding to, and you see what that home looked like. This was a new home and how they renovated it. So we came in and funded them on building this brand new home. So you can see what it looked like there, professionally staged, great finishes. We did a $172,000 loan in this property, 75% loan to value, which is on the high end of what we do. 10% interest rate. Took 9 months for them to build this home and sell it. They sold it for $230,000. This was one of 11 homes that we funded CTV on last year alone, and we'll fund them on even more this year as they're continuing to grow and ramp up their business with the opportunities in front of them. Here's another great example, Global United Holdings. This is an operator out of Columbus, Ohio. We funded them on this property. See, this is kind of a traditional renovation for us, renovated or a kind of dilapidated older home in need of renovation. And this borrower had done a good amount of renovations already, mainly in this area. We gave them a $117,000 home to buy this home and then to come in and renovate the interior and exterior. And you'll see here what they did to this home and how they completely redid the exterior face and the whole interior. This professionally staged it as well. So a loan at 70% loan to value is how we based the loan. We said based on how we valued the home, we got a third-party independent appraisal, we did our own valuation. It was a 70% loan to value. Well, they actually sold this home for $199,900, actually making our loan less than 60% to the real value. They sold it in under a month, and this was one of 5 properties we funded to this borrower last year alone. So these are the types of borrowers, the types of projects, the type of quality of work they're doing, the type of work that your capital is going into. Not only helping these investors make a great return, but helping improve these communities, provide great new housing to new homeowners or residents. It's really amazing the amount of impact one loan can provide in a community. One investment for one of our investors can do. It's pretty astounding, and we're going to be fortunate enough to do this over 500 times this year alone.
Yeah. Excellent. Thank you again, Don. That's fantastic. Again, impressive to see where your capital goes to work. And with that said, I'm going to go ahead and introduce you to Nathan Trumfio, who's the president of our DLP Direct Lending Partners. Again, if you take a second, listen to him, you're going to notice Nate talks a little loudly. He does host a webinar every month called Talking Loudly with Nate. So listen to him. He'll give you a little bit more about what we do. Take it away, Nate.
Hello, existing and prospective DLP capital investors. This is Nate Trumfio here, president of DLP Direct Lending Partners. I want to give you some insights as to why we are still thriving here, and that has been our marketing message. At Direct Lending Partners, we are absolutely continuing to grow, even with all the uncertainty and turmoil out there with this pandemic that has affected many of us. What it's done to our industry is that a large percentage, probably about 75% of our competitors have stopped funding or are probably going out of business. Now, you might think that some of those decisions are mainly because of the uncertainty in the market, but it's actually more so based on how our competitors are capitalized. So I do want to take this moment to say, on behalf of all people at Direct Lending Partners, we have so much great appreciation for our investors and our fearless leader, Don, for leading us on the path of being capitalized through our fund structures and deploying diligently the capital to other experienced real estate investors. As a result of that, we're able to continue funding, continue being open while other competitors or lenders are restricted based on how they're capitalized and their reliance on Wall Street. So that's one of the main reasons that we are still thriving, and it's really because of all of your investments. What we've done as a result, because there is some uncertainty out there, is we've tightened up our programs. We have reduced our leverage, which requires more skin in the game from our borrowers, which firmly reduces our risk. And we've also been able to increase our pricing a little bit, helping to drive better returns to all of you. We appreciate all of your support very much so. If you want to stay in tune with what's going on and some of the info that we're bringing out as far as content, check out talkingloudly.com, subscribe to our YouTube channel. We're putting out a lot of great content to keep everybody updated with what's going on in the state of lending. And again, we are here thriving, and it's a big thanks to all of you. Hope you have a great day.
Excellent, Nate. Thank you very much. And thank you to the entire Direct Lending Partners team. Again, it's wonderful. Do check out the webinar series. You'll learn more than just lending. Nate talks about a lot of market events and things going on. So definitely a great series. So response to our poll, many of you must know us and got that correct. It is DLP Elite Partners. And again, most of these partners we work with are repeat investors, right? They come to us time and time again. We make a lot of loans with them, do a lot of business, and do educate them. We work with them on those mastermind series that we host as well. So that being said, we're going to roll right into our next poll question, which again, we want to know if you know what investing in a high efficiency net zero home is equivalent to. Is it taking a passenger car off the road for a year? Is it driving less than 14,000 miles, which is, again, more than what I drive every year? Or is it growing 3,600 tree seedlings for 10 years? That's a long time. So let us know your responses to that and your thoughts, but that's a great transition to talk a little bit about Bright Home. So this is new, right? We have done a lot of different things in real estate, but now we're getting into new home construction buildings. So here in Florida, if you could tell us a little bit about Bright Home and how that fits into the whole strategy, we'd appreciate it.
Thanks, Rich. Appreciate it. And, it's a great lead in off of, our conversation working with, very best borrowers, repeat clients, borrowers who really want to grow and scale great businesses. And that's really how this all came to be. So in 2018, Oren, the founder of Bright Homes, came to DLP as a borrower. So we started funding Oren and Bright Homes on building these brand new net zero, energy efficient, gorgeous homes throughout the state of Florida, originally in a couple markets throughout Florida, and really got to see firsthand as the lender going out and inspecting these projects and meeting the team and seeing the success and seeing them sell. Got to understand the business and realized they had tremendous opportunity for growth. And as Oren attended our elite events and built a relationship with myself and our team, we realized there was an amazing opportunity here to work together on an even closer basis. And in 2019, we came in and brought all the DLP resources to Bright Homes and partnered with Oren and Bright Homes and became 50-50 partners in growing Bright Homes. And that's been an amazing start here. And as through that time frame, we've been able to now go from being a home builder, building homes for sale in a few markets, to now building really throughout the state of Florida here in some pretty big scale, as you can see on the screen here. So, 2019, we were in 3 markets. Now, as you can see in those blue marks, we're in 9 markets throughout Central, East Coast, and West Coast Florida. Last year, about 100 homes built. This year, we're going to build over 400 homes. And one of the really cool things, too, is we went from building homes only for sale to now building homes for all. And with literally our marketing message is Bright Homes for All. So we're now building homes for sale, building homes for residents, for rent. We're building homes for people who want to do a lease purchase. So we're able to provide homes for all. And by doing that, we're able to now also have our investors be able to participate. And as we build this portfolio of brand new, beautiful rental homes, build this portfolio, be able to have our investors participate in the DLP Housing Fund. And you can see an example of one of the homes here that we built. And again, these homes are all net zero homes. That means that they produce more energy than they consume. Average homeowner or resident actually gets a credit on their energy bill. And we build mainly 4 different homes. We build these homes that are fully upgraded homes. We don't go through a selection process with our borrowers. We fully upgrade these homes as we build them. And we built 4 different models. And one of the cool things that Oren and I came up with back when we partnered up is we actually named these 4 home models by our 4 sons. So interesting enough, Oren and I both have 2 young sons at basically the same ages. And so this home here is the Ethan. This is Oren's older son's name. And this is a 3-bedroom, 2-bathroom with a potential 4th bedroom home, and it just won a Parade Homes Best Home Floor Plan. So Oren's telling me that the Alex, my youngest son's floor plan, is going to be the next winner for another award that we're about to win. So it's a competition, seeing whose kids' houses can sell more. I have a feeling Oren's been rigging this game though, but it's been pretty cool, and our residents and buyers really relate to knowing they're kind of owning the homes named by our, the owner's kids. Has been a pretty cool process. But you can get a feel. You can go to brighthomes.com as well and get a feel for the homes we build. It's been pretty amazing being able to provide these homes. And really, again, these are affordable homes, low 200s, high $200,000 homes, in areas that really need them, where there's an undersupply of affordable homes, both for rent and for sale.
Excellent. Well, thank you again for that, Don. And again, I'd like to put my lobby in for my children's names to be some of the homes. And to be fair to the rest of the DLP team members, maybe we'll make that a raffle in the future or one of the contests for the quarter. But again, as we talk about the Bright Homes, rather than me tell you about it, I'm going to turn you over to Oren, a great guy, great operator, as you know, we partnered with, and he's going to actually take you through a tour of one of our high efficiency net zero homes. So Oren, please take it away. Thank you.
Welcome all DLP existing and prospect investors. My name is Oren Segev. I'm the CEO and founder of Bright Homes. I want to share with you my story with DLP. It started 3 years ago. I was a borrower with big dreams and great vision, looking to differentiate myself in the home building business. With your support and DLP, we were able to make a dream into reality. Let me show you how. Normally, I will walk you into the house, but these days, we're actually doing it virtually. So you're all probably wondering, what are we doing these days? So good news, construction in Florida actually deemed essential, so we didn't miss a beat. We are building as much as we ever did. We're selling home as much as we ever did. In fact, April will be our best month ever. We're going to deliver 18 beautiful homes to prospect home buyers. Behind me is a home under construction. It's actually a great floor plan named after Don's older son, Donnie. So how we differentiate in Bright? We build net zero homes with little to no electric bill. We build an unbelievable building envelope, and on top of it, we add our solar panels and inverter, which means that our homes actually generate more energy than typical homeowners will consume. I want to thank Don, the DLP team, and all of you guys for making this dream come true. I hope you enjoy your virtual dinner and hope to see you guys all soon in a live event.
Fantastic. Thanks, Oren. Larry's here back with you now, and with Don here. So let's go ahead and keep moving forward. So let's take a look at our poll results here. So actually, this is a bit of a trick question. So sorry for that, but we wanted to make you see here that actually all 3 of these answers are correct. So when you invest into a high efficiency net zero home, you're doing so much good for the environment while all at the same time living in a beautiful brand new home. So thank you, Oren, again for explaining that. So Don, we've gone through a number of our businesses, our family of companies here. And before we get into DLP Capital specifically, what I'd love to do is take a poll of the audience here and see who is joining us here tonight. So what I'd love for you to do now is let us know via the poll here if you are an existing DLP investor or if you're a future DLP investor. And we'll check those results in a little bit, but thank you for participating in that survey. So as we mentioned, I mean, we've been talking about growth over the years and how we've been serving our residents and borrowers and our clients. But as DLP Capital Partners, specifically as a fund manager, most folks that are on this call here today are probably wondering what's happening with the stock market, worried about the volatility. Many of them probably not because they are DLP investors, but just how we've performed. So I'd love for you to go through our performance, our track record, and then what people can actually invest into today.
Awesome. Thank you, Larry. Love to. Yeah. So DLP Capital Partners is the investment arm here at DLP. This is the engine that drives DLP. These are the investment funds that you invest in. And this all started in terms of our investment funds back in 2013 with the launch of our first fund, the DLP Equity Fund. And you'll see that growth, launching 8 funds over these past 8 years. And the growth here from a number of investors, starting with a very small number joining us back, though many of those who are with us here tonight, to where we are today with more than 900 investors, more than $850 million in assets, and launching our newest fund, the DLP Housing Fund here, which I'll talk about in a moment. But what's really amazing over these past 8+ years of managing these funds is we can say here with 100% confidence that we have never had a loss to any investor. We've never missed a return target in any of our funds. We've generated double-digit returns to all of our equity investors. We've exceeded return targets in all periods in all funds. And we've done this through multiple cycles. And we're here doing it right now through coronavirus, through a very unique market environment, which we'll be talking more about here tonight. And it's been really, really an amazing time. And we're just getting started. That's what's really, really amazing here. And the message of delivering no losses, consistent returns, and double-digit returns, that message, that focus, that drive to how we invest has not changed since we started, and it's not going to change as we move through into this next cycle. And that growth, that focus on doing that has allowed us to grow here. You see from 2013, we had 33 investors. And I know many of them are here with us tonight. And now in 2020, we have over 900 investors. And what's been really cool, one of the main reasons that we've been able to grow from 33 to 900 investors, first is all of our investors who were back with us in 2013 and those who joined us in 14, 15, 16, 17, virtually are all still with us because our investors stay with us. They've given us their confidence, their support, continue to invest and grow their investments with us, bring us their family, their friends. We literally have great-grandchildren, grandchildren, children, brothers, sisters, cousins. I mean, we have the whole gamut. We have some family where I think we have 12, 15, 20 family members now. It's just been pretty cool. So we really appreciate that support. I know many of you brought guests here to this event here tonight. So thank you. And we're going to break that 1,000 investor mark here soon, which is pretty amazing. We're going to show you how we're going to be able to continue to do that here.
Awesome. And one of those folks that we actually has a growing family himself, Steve Wilson, a great investor of ours. We're so very happy to have him here with us this evening to tell us a little bit about his experience and how his family and he have experienced DLP Capital Partners.
Hi, I'm Steve Wilson. I first heard about DLP because I had my AM radio on every day. I was a mechanic, a self-employed mechanic for about 28 years, and I ran my radio the entire time I was on the road. And Bobby Gunther Walsh, I figured he was never going to be quiet unless I invested. So I called up and I interviewed with Larry. Met him at the Bethlehem office. When I met Larry, if I recall, I wrote a check on the spot. Larry and Don, the requirements I had of them, they both had to be smarter than me about real estate and marketing and finance. And that was necessary for me to take the lead. The other thing was I had to feel as though I could trust them, and I had to feel as though we had common goals. And I think all that happened right away. Don called me after I invested, and then I met him at the first dinner following that, about 3.5 years ago. I believe I was investor 174. But I met Don, and we were talking about the trend towards rentals. And I had done that research for years, and I'd been seeing the people in my friendship circle were opting to rent as opposed to buy, which surprised me. And Don's research showed all those trends too. It showed me that they were on the mark about the region and soon the nation concerning trends in real estate purchasing and rentals and such. We all saw the growth in the Lehigh Valley. I wanted to invest my money in this region because in the end, I'm an emotional investor and I wanted to invest in something I believed in. And when I spoke to Larry and I spoke to Don, I realized I'd found a home. It was a major factor to me to not be directly involved because I'd run my own business for 28 years. And I didn't want to have a hands-on approach anymore. I had been completely hands-on for 28 years. I did my own books, I did my own selling, I did my own wrenching, I did my own marketing. And I wanted to take an indirect involvement into something I believed in. That's why this fit me so very well. I was so amazed at how, since the day I met Larry and Don, how my life has changed. And yet, my investment strategy hasn't. But can you imagine, since I met Larry and Don, I lost my mother, I lost my father, and I had Pinky. And so I see my mother and father in her. When I see her rampaging around and I see her beauty. My mom is a handsome gal, and I see them in her.
And, you know, we're just so fortunate to have the opportunity to serve investors like Steve and his family. And baby Pinky is such a cutie pie for sure. But it's just amazing the opportunities we have here to get to know you and your family. So thank you very much, Steve. So our poll results here, we have 62% of the people on the call tonight are existing DLP investors. So thank you. And 38% are future DLP investors. So welcome. If you have not been with us before, welcome for the first time. And if you have, welcome back. Thank you again so much here for joining us. So what I'd like to do here is continue forward a little bit. You know, we've talked about the volatility in the stock market, how we're a safe alternative, but, you know, we're continuing to raise capital, of course. And, you know, we have other benefits as well. I mean, cash flow, liquidity, and the way that we're able to, you know, put tax advantages into people's investment portfolios. So I did a test, Don, the other day. I had my girls, we had Sarah and Lily, and we had some cookies, and I wanted to teach them about taxes. So what we did was I gave them each a cookie, and then I ate 46% of each of their cookies. I'm not sure, frankly, if I'm allowed back home after this, but, you know, we'll see. But I just wanted her to understand that real lesson. So nobody likes to pay more tax than they need to, right? So what I'd love to be able to do here, and all jokes aside, of course, let's talk about some advantages, including the tax advantages of our various funds. And I'd love for you to start with our brand new $1 billion DLP housing fund.
Awesome. Thank you, Larry. So yes, I'm very excited to talk to you about our investment funds here, and then we'll be opening it up here to questions here in just a few moments. We're really excited for that as well. But the DLP Housing Funds, our new fund we just launched this year. It's our 8th fund in 8 years, $1 billion hybrid evergreen REIT. And I'm going to explain what that is here on the next couple of slides. So first thing here is, what does the word hybrid mean? So this is our first fund. So we've done 8 funds. All of our previous funds, we've either made loans, we've run our lending strategy, or we've invested in real estate as an owner, and an operator, and a manager. It's our first fund we've ever done that's going to do both in one fund, or I should say is doing both in one fund structure, giving all the benefits of both strategies. And all the benefits, what I mean by that is, first and foremost, it's an evergreen fund like our lending funds have been, meaning it's an open-ended fund. We don't have a specific date that we're going to be forced to close the fund and have to send you back your money, and now you're going to have to pay a bunch of taxes, like Larry's story here with Sarah. But you're going to be able to stay in the fund as long as you like, be able to be very tax efficient, but you'll be able to get out of the fund when you see fit. You know, you won't have to stay in long term. In addition, the fund is, as Larry said, very much sheltered to avoid giving up 46% of your earnings. The fund is designed to shelter the income from taxes through depreciation, through our ability to use things like like-kind exchanges, 1031s, to avoid being taxed when we do sell properties. It's in a REIT structure, which is the most tax efficient type of investment structure. So a lot of ways that we help minimize tax and maximize your return. In addition, the fund is providing monthly distributions each and every month. You have the ability to take distributions or let it compound and grow, that you have that flexibility. So here you can see kind of the stats on the slide. So 6% monthly distribution, that's 6% paid out to you, net to you on a monthly basis. And one of the very unique things, and this is with all of our funds, we pay out that 6% preferred return before we even earn our management fee. We don't earn anything until you get that return first. Then we get our management fee, and then we have a target of a 12% return. That's 12% net to you. So you get 80% of the profits, we get 20%, with a target of 12% net to you on an annual basis. All this with the ability to exit the fund on an annual basis, open-end fund where you can exit out on an annual basis. You're not stuck being locked in for 5 years, 8 years, 10 years like most real estate funds. You can invest in this fund via IRAs or qualified money, as well as non-qualified money. And again, very much tax advantageous. This fund, as Larry said, is $1 billion fund. It's a large fund. It's going to allow us to really scale this over the years ahead, building a large portfolio. It already owns over 4,000 apartments for over $200 million. It's going to be able to grow a large portfolio of loans, of direct real estate assets, including Bright Homes, and allow us to generate really an amazing fund structure. And one of the important things I want to mention, and you got a chance to meet my father here in one of the videos earlier, you probably noticed, and if you look through the videos, you'll see my sons and understanding that here at DLP, we invest in our family, and in our family meaning my family, myself, and then our family here at DLP, our management team, is we invest right alongside our investors, and we're not out there doing something else, investing differently, and then selling you on this as an investment vehicle. So right now, across our real estate portfolio, we are by far the largest investor. And in this fund, we are committed to putting in at least 5% of all the committed capital. It's $1 billion fund, so that's a big commitment. We're going to put in at least 5% of all the committed capital. And right now, as this fund started, owning now 4,000 apartments, over $200 million, we already have over 20% of the equity already in this fund, by far, again, the largest investor. So we invest right alongside our investors because we believe this is the place to be now, in a good market, in a challenged market, in a recession, in a thriving market. We're so confident this strategy is going to be able to perform really, really well. We have this fund audited by Cohen Resnick, one of the best and largest accounting firms, auditors in the country. We hired the very best law firm to create this fund and make it a very unique structure that can create some very unique tax benefits and overall flexible structuring called Seward and Kissel. And we report on this fund quarterly, but we can distribute to you monthly, as I mentioned a moment ago. So that fund is we believe, the best of everything DLP's put into place over many years, kind of is all worked together to build this. Everything you saw us talk about tonight all goes into running that fund and generating returns and maximize returns. In addition, though, we still have open the DLP Lending Fund, which is on its 6th year here. This is our fund that strictly makes loans, direct loans to real estate investors. First position loans, average about 55% loan to value. So over 6 years now, we've been running this fund, we've been providing a 10% preferred return to investors. That's 10% to investors before we earn anything. And that's paid out monthly. The fund has an overall return target of hitting at least that 10% preferred return. Historically, we've drastically exceeded our return targets. And again, all distributions paid out on a monthly basis. Another great benefit of this fund is liquidity. We have an ability that you invest in this fund, you can provide 90-day redemption notice and get out of this fund. You don't have to make, again, a long-term commitment. Very few investors, even in this environment, want to get out of this fund. As you'll see on the next slide here, the returns that we've been able to generate with really amazing returns, again, with the option of being distributed monthly or the option of having it compound and grow. This fund is also a REIT, and it also has the tax shelter benefit of qualified business income, which means you get a 20% reduction in your tax rate for investing in this fund versus most other sources of income. And you'll see here what the returns have been. That dark blue line on the bottom is the target return, and everything above that is how much we've exceeded the targeted return in every period since we opened this fund back in 2014. Really amazing, consistent returns net to investors. And then third, we have the DLP Positive Notes Fund. This is our newest iteration of our fixed notes that we've been offering for many, many, many years, where we give investors the ability to get a fixed return on your investment. So when you come in here, when you come and invest in this vehicle, those returns you see on the screen is exactly what you're going to earn. There's not a fee that comes out of those returns. You have the option of taking distributions every month. You have the option of letting it compound and grow and get the power of compounding interest. And these returns are guaranteed by DLP. They are not guaranteed by the FDIC, but they are fixed guaranteed returns. We're obligated to pay them to you. And of course, we've never, ever had a period where people did not get their fixed returns on time in any period. As you can see there on the screen, based on how much you choose to invest and how long you choose to commit, as short as 90 days, as long as 5 years, your rate can be from 5 to 10% fixed. You know exactly how much you're going to earn each and every month. So 3 different options. This can be a great way for one of the investors who are new to us to get started, to lock in for a fixed return and kind of dip your toe and get to know us, as many investors in this meeting tonight have done so.
Awesome. Thank you. And, you mentioned 5 years. It seems like 5 years is the time that we've been in quarantine and kind of separated from everybody here in the world. But one thing I wanted to do was lighten it up a little here and take a look at our next poll question. So as we take a look here, during your time in quarantine, we'd love to hear your thoughts here. Have you A, colored or cut your hair at home? B, allowed a spouse or a relative to color or cut your hair at home? Or would you rather sport that fantastic 70s style long locks rather than let a non-professional know your head? Now, it's pretty clear that you can see that the route I took as far as A is concerned, never looking back, I think. But Don, I mean, how do you what's your secret? You have such a fantastic head of hair
there. So I went with option 2. So my wife can attest, who's on. She can tell you about it more. So she, over a glass of wine on a Friday night about 3 weeks ago, we bought the clippers on Amazon, and she watched some YouTube videos, and we sat outside, and I forced her first to test on Alex and then on Donnie, and then I let her come around to work on me. But she worked really hard. It took quite some time, but did an excellent job. And she's due again here soon. So she did a great job.
Awesome. Now did she let you cut her hair?
She has not let me come near her hair. I have offered a couple of times, but she has not provided that opportunity yet.
All right, maybe it's for the best. So why don't we go ahead and we'll keep on rolling here. So obviously we have been going through some pretty unique times through the virus pandemic. And so what I'd like for us to talk a little bit more now is kind of how we've been going through all these changes in the last 45 days. I'd love for you to share with our audience here how DLP and how our funds have fared, of course, during the pandemic. But then more importantly, how can investors consistently build wealth in all market conditions, even after this is over?
Yeah, thank you, Larry. So for those of you who are new, kind of first time with us here tonight, or first time maybe recently with us, we've been hosting a weekly webinar, actually, same day as today, every Thursday at 4 o'clock Eastern. So we'll be doing that again next week. So if everybody's on, join us. You'll get the email invite from us. Join us next Thursday at 4 o'clock. And we've been focusing on exactly this: how to consistently build wealth in all market conditions, giving you insights to what's going on in the real estate market, how DLP is performing. Last week, we actually went through in detail all of our performance on all of our funds over this past quarter. But I'll give you a little bit of highlight here today. And this is, of course, always updating. So here just this past week in Pennsylvania, which I know many of you are located, and Governor Wolf has reopened construction starting tomorrow. So really, really exciting, huge relief for many. Big deals. We lend to borrowers doing construction in Pennsylvania. We're building new apartments and homes in Pennsylvania. So that's really exciting. We're hearing that they're going to reopen home sales next week, May 8th. So we're still holding our fingers a little bit on that, but that's what it looks like. So as much as we've adapted to virtual sales, we'll be able to get out there and actually tour people through homes and operate a bit easier. In Florida, actually starting today, they've started reopening some restaurants and some businesses, and here it's been really fortunate as well. The construction has actually stayed open, as Warren mentioned, here in Florida through all of this. And in all the places we're located, all 18 states, property management has remained an essential service. So really haven't, thanks to our front line, haven't really missed a beat there in managing our properties. And we'll talk more about that in a moment, kind of how we're doing with rent collection and so forth. But in short, we've been thriving. You saw some of the comments from Patrick at the beginning in his video showing you some of the ways we've adapted. But our whole organization is operating, thriving, 300 plus people operating off Zoom, operating virtually. Our frontline team members out of our community still out there doing their job, supporting our residents, and it's been amazing. I mean, we certainly had to deal with challenges like most, but really haven't missed a beat. And that's partly due to the strategy and our focus on investing in this asset class, investing in affordable workforce housing, investing in funding loans that focus on capitalizing on volatile situations, but also due to the organization built and that purpose and mission and core values and the type of people that make up DLP is allowed us to thrive, because not every real estate operator, even in the same strategy as has been able to thrive in this environment. And due to the amazing people you've been hearing about tonight, we've been able to do so. And as you'll see here, first and foremost, maybe the biggest thing, the thing that I'd say the media has made the most noise about in terms of real estate is nobody's going to pay their rent, right? Nobody's going to pay their rent. Nobody's going to pay their mortgages. Everybody's out of work. No way, there's not going to be no payments made. And that's what everybody was saying coming into April. And so you read a lot of media, that's what they're still saying. So here's the reality though. So we've actually increased our occupancy by about 3% since coronavirus started across our whole portfolio. And as of yesterday, we've collected over 94% of our rent for the month of April, still with some final numbers from yesterday and all of today to come in. Think about that, 94+% of our residents, so probably over 95% paid their rent in April in the midst of this really, really crazy time. So that's a great testament to the effort from our team, and also to the asset class, the need for affordable places to live. But one of the great things about this for us as an investment fund, not necessarily for all multifamily operators, but there will be some challenges in some cases in valuations. There's going to be some problems with some operators who didn't manage this well and just shut down their offices and stopped collecting rent and stopped leasing apartments and stopped servicing their residents, who are now going to face some big challenges. A lot of the operators who were frankly challenged before coronavirus. So it's going to provide us some opportunities to capitalize on coming in and providing those operators who need cash quickly with that, and then allows being able to buy properties at discounts, buying fundamentally great properties, producing great cash, providing great housing at discounted prices. So we're being prepared to be able to provide those solutions, just like we've been providing these solutions to home owners over years who just want to sell their homes quick. We're going to be able to do the same here with multifamily operators. The other really interesting thing, as Nate talked about, is if there were 25 lenders, Nate said 75%, I think he was being generous there. If there were 25 lenders out there lending who as our competitors 6 weeks ago, there's 2 or 3 of them left. The vast majority are on the sidelines because their money comes from Wall Street. They haven't built this investor base and this fund structure, invested in generating really amazing returns to their investors, but building a base that allows them to continue to lend when our borrowers are finding more opportunities than ever. In fact, we have the strongest pipeline we've ever had in lending. We had more loan applications we've ever had, more loans originated we've ever had, more submissions we've ever had here in April. So all these numbers here are talking about March. We've been beating all these numbers here through April. Really have an amazing time since coronavirus, as more and more operators are coming to us because we're a direct lender with control of our capital. And so far this year, we've already raised over $35 million in new capital from you as our existing investors, from new investors who've joined us this year. We've taken that capital and we funded 166 loans for over 53 million in loans, plus 44 million out in lines of credit. So over $97 million. We've also gone out there and we've invested some money in buying some properties as well, which we'll show you here on the next slide. We've actually been focusing on buying properties even before this happened. Looking at the properties we've closed so far this year, we put under contract way before coronavirus, and we've been really focusing on buying properties that we felt would generate great cash flow through any market environment, and finding ways to extract even more value from properties that could produce great cash flow. And I'll show you the properties we bought so far here this year. So the first one we bought, a little different than our normal property, but I'm highlighting this for a couple of reasons. So this property is on St. George Street here in St. Augustine, right in downtown St. Augustine, the best street, best spot in town. This was an auction situation, kind of a normal distress situation. I bought this from a lady who owned it for 40 years and was retiring, and bought it in an absolute auction. But the cool reason I'm showing it is because this is one of the properties you can win as a raffle here. Really, really cool. My wife's doing an amazing job, Carla. We were out there yesterday putting up lights and choosing flooring and really making this place shine. So that would be one of our vacation rentals available. But then we also bought 2 really great apartment communities. The first one here, Wexford Village at Devonshire. It's a 340 unit apartment community in basically Charleston, West Virginia, the capital of West Virginia. Really amazing community, really the best and only really great community that offers affordable, nice place to live in this market with a credible demand, great diversity of employment. And that property is one of our lowest properties in terms of collections, delinquencies already through this time. Brought on a great team and really amazing property we're excited about. We also bought Willow Trace here in Shreveport, Louisiana. This is our second property we now own in Shreveport, Louisiana. 192 property units built in 1978. Really cool property, 2 pools, right around a golf course. Really great property. Just needed some capital invested into it, take it to the next level and drive up returns, which is what we're doing. This property's also been performing excellent through this whole time. And again, here, while we've been buying these properties and making these loans and going through this virtual world, we've continued to exceed and achieve our targeted returns across all of our funds. So in fact, here are the actual fund performance. And some of this is hot off the press here just this week. So the DLP lending fund generated 11.78% net return to investors in Q1. The income and growth fund, which is a similar fund to the lending fund, did a 13.11% net return to investors. Our DLP housing fund, the new fund we talked about, which is in its beginning stages, achieved its 6% annualized preferred return. The rest of the returns haven't yet been distributed. We're paying out the preferred return monthly, so we exceeded that, hit those returns in our brand new fund, just ramping up. Our last equity fund before the housing fund, called the Equity Fund 2, is now in the stage of starting to sell and maximize its properties, generate a 13.77% return here in Q1 net to investors. These are all realized returns, distributed cash into investors' pocket. In our fixed fund, 12.33% net return to investors. And then all of our fixed note holders received a 5 and 12% fixed return, whatever fixed return they locked in at. And so it's pretty exciting. We're excited to continue to build more really great stories and continue to thrive here through Q2 and through the rest of 2020 with your support.
Awesome. And it's been great. I mean, we've seen how we can adapt even this event tonight. And, we've done dinners for a long time, but this is our first ever fully virtual dinner. So you can see that we're looking ahead and making sure that we can adapt to any situation.
Awesome. Agreed. So, so with that said here, I think we're going to go ahead and dive into questions. As we do questions, we're going to jump into the raffle here after questions. So I believe we're going to be able to allow people now to put questions into that chat box. So you use a little chat box on Zoom, you can type your questions into now, they'll come to us. And then when you type that question, you can put it right in the question, or we'll follow up and ask you. If you're open to just asking it live, we'll take you off mute and you can come on and ask the question live and to the audience as well. So it's up to you. You can either just type them in the chat box or put in the chat box when you type it in that you'd love to ask it live, and we'll ask you to come off mute and ask it live to the group.
Awesome.
He's bringing dessert home.
Here they come.
Hi, I've apparently been unmuted.
It's Jen. Hi, Jen. This is Larry.
Hi, Larry.
Jen.
So my name is Jennifer Hickernell. I'm Larry's wife. I wanted to make one statement. I could not answer with two answers on the haircut question. I have both cut somebody's hair and cut my own hair. Also, so I had a two-legged question. It's not a video, Lily. I had a two-legged question. The first question is, as usual, about the foundation. I understand the foundation office is in a new building and it's under new leadership. And I was wondering about the progress of that foundation, and also on the idea of helping those individuals that might be in need. I was wondering about the rent that you're getting. Are you getting the rent from your rental properties? And if not, what are you doing? Is there any assistance that you're offering to people who might not have an income? And what's being done in those situations where you're not getting the income? Feel free to unmute or mute me now because I have children in the background.
All right, thanks. Thanks, Jen. So we'll dive into that, and I see lots of questions coming in. So let us know. We'll be messaging you if you want to ask them live, or we'll just read them out. So Jen, two questions there. So first is the DLP Positive Returns Foundation. So this is a foundation we set up a couple years ago, focused on two main causes. One is the epidemic in America of affordable housing. So that's really the world we live in here in terms of our for-profit businesses at DLP, providing housing that's affordable to people to own or rent. And that's an epidemic, and it's the advantage of the strategy in that there's no affordable housing being built in almost any market, and a big demand for it, especially if we're heading in a recessionary environment like we are. So that's the first big epidemic we focus on. The second is on jobs, the need for jobs. It's probably never been more prevalent than the environment, again, we're in right now. So foundation is up and running. We've been taking in capital. We've actually committed here at DLP this year that 0.25% of every dollar that's committed to all of our funds, we are going to donate out of our management fee to the foundation on behalf of our investors. In addition, we're donating 0.25% of all of our net revenue at DLP for all of our businesses into the foundation as well. And we're partnering with some really great organizations, launching some new initiatives. Actually, my wife was at Publix at 7 a.m. this morning. They opened up the store just for her. She picked up truckloads of food for the local homeless coalition. And my wife is now in charge of the foundation. So I think Jen gave her a plug there. So that's been pretty cool. And we got an amazing leadership at DLP who stepped up to take part in leading the various committees and groups to drive results here, many of which are with us tonight. And second question, in terms of people who can't pay the rent, first of all, we've been very fortunate that most people have been able to pay the rent, but we've been working with them way more than ever. If they can't pay it now, we'll put them on a payment plan. We're working with them. If they're waiting for stimulus money to come in, they're waiting for unemployment to kick in, whatnot. We do work with multiple different voucher associations from government-backed and other coalitions. So we're doing a lot of things, everything we can to keep somebody in the affordable home they're in, the place that they've gotten used to. And we've been very successful, hence collecting over 95% of our rent. And then 5% we haven't collected. Many of those people are on payment plans. We're working with them to get current. So thank you, Jen, for those questions.
Awesome. So we have a couple of additional questions here. So on the lending side, Saul has a question here that says, what percentage of borrowers are currently non-performing or have asked for modifications, and are we granting them?
Yeah, great question. So I skipped over this. I'm glad you asked that, Sal. So we had a lot of borrowers, maybe not lots, but maybe 10% of our borrowers that did come to us and said, hey, what are you offering? When everybody heard all the media and all the news about modifications, what are you doing? And we, politely told our borrowers, we're here to help you. We're here to educate you, here to work with you. But, our payments are due. And one of the cool things is most of our borrowers, we have a very close relationship. Most of our borrowers actually know how we raise our capital. They understand how it works. Many of them we've invited to come to our dinners. Some are here in the dinner tonight. So they understand that our money isn't Wall Street money. Our money isn't government money. Our money is your money. And they understand that for us, it's not an option to not pay our investors. We train this and teach this to our investors all the time. So I'm really proud to say all of our borrowers, other than a very small number of borrowers who were in default before coronavirus, every single one of our borrowers made their April payments. 400 plus loans, 470 plus loans made their April payments. Yes, a few had them go NSF on the first of the month, didn't pay, but then they got paid on the 3rd or the 5th or the 7th. All of our borrowers have paid their April payment. So because we're working with strong borrowers, with experience, with liquidity, they're doing great in this environment. And most of them are looking to grow, not struggle through this environment. So it's been amazing. So thanks for asking that question.
Awesome. All right, we have another question here from Fred. We mentioned that, of course, rent delinquencies were minimally affected, but what's your outlook on the future? I mean, if the coronavirus continues to go on longer, how do you see that playing out over the next couple of months?
Yeah, it's a great question. I mean, it's one none of us know. I mean, we're all in uncertain times. Nobody knows exactly how long it's going to go. I mean, we're all seeing positive signs of the world starting to reopen. So it's a hard thing to predict. What I can tell you is many industries, including real estate, fundamentally are great. The fundamentals of what's going on in the economy today are largely not driven by any core issues. They're driven by this pandemic and government forced shutdown. Unlike the last cycle where there were real issues that caused a recession environment, this is being caused by government shutdowns and the short-term, in the scheme of things, pandemic events. So I think a lot of businesses are going to do really well. I mean, on the short term, there's going to be businesses that get hurt. I mean, there's a lot of businesses struggling, from restaurants to hotels to whatnot. And it'll be interesting. There's a lot of talk about, a lot of hotels, different areas going to really boom. And people are going to rush back out there. A lot more people are going to do staycations and vacation here in the States versus traveling internationally. There's a lot of that type of questions that we don't know. I do think the stimulus plan was incredible. I think it's putting money in the types of people's pocket who are going to put it right back into the economy. I think that the boom for people buying homes is going to be incredible. I don't think we're going to see a drop in home prices, and I think we're going to see huge home volume and sales and growth. And I think construction is going to grow and pick up very fast. So the two biggest drivers to the economy at the end of the day are real estate sales, mortgages, and new construction. I think all those things do really well. Unfortunately, when things get tough, a lot of small businesses, will go out of business. A lot of companies will struggle. But for for the better run companies, that's opportunity for them to grow, for them to hire more people. Companies were already building a strong foundation. So it'll be interesting. It's going to be unfortunate for a lot of businesses that are going to struggle. But as an overall economy, I think we bounce back pretty quick.
Awesome. Thank you.
Hey, Don.
So here's a great question from Sharon. She's concerned about affordable living in Lehigh Valley area. I think that's probably true for many across the country. So it seems that most homes might not be affordable to buy right now, or for the baby boomers specifically. So what's your take on rentership going forward and the home buying market and what we can see there?
Yeah, it's a great question, Sharon. So one of the most interesting stats is, we didn't cover this a lot tonight, but we've been moving drastically to a rentership nation for a decade now. So millions of people have gone from homeowners to renters, many by choice, not by, because of, qualifications or any other reason. And the biggest growth in renters are baby boomers by far. Steve said that in his video as well. People are choosing to rent versus owning. And I think we're going to see a lot more of that. But whether it's for sale or for rent, that is a major challenge of affordable housing. That's what we're focused on. Our average rent across our portfolio is about $830 a month. We invest in properties that are affordable to average people in that local market, average residents. But it's a challenge, and it's one that I don't think gets enough focus and attention and need for affordable housing. And that's really what you investing with us here at DLP is investing in. I was providing more affordable, well-maintained, safe housing for people to own and rent.
Awesome. Sounds good. I like this question from Anthony, talking about the diversification of our funds, specifically in our pref and now our housing fund. So how does that benefit investors to have that many communities and apartment units in one fund, as well as having the lending fund in the same fund as well?
Yeah, so one of the interesting things, and thank you, Anthony, of investing in a fund in general is, our returns are not based on one investment. We've had investments that have been unbelievable home runs where we earn, 500% return in 2-3 years. And we've had investments that have been singles. We've had a few that have been strikeouts. We've had singles, we do as well as we want. Maybe we generate an 8% return, right? So when you're in a fund, you get the benefit of that diversification of the whole portfolio. And to what part of Anthony's question here is, in a lot of our investments we make, the fund sits in a preferred equity position. So when we're as a lender, we're on average, we're at 55% loan to value. So that means the borrower puts in 30% equity behind us. That's at risk risk first. In addition, they're creating value in that property. So we have all this equity sheltering our investors, that the borrower could lose money on a property, but that doesn't affect us. And we've certainly had, in the thousands of loans we funded, we've certainly had borrowers who lost money on a home flip, but we didn't lose any money. We didn't write off any money. We've never written off $1 of interest on a single loan. And same thing on equity investments. We have never had this happen, but we could have an investment that we do with another partner as an equity partner, and they could lose money, and we still generate a 12% return with how we structure our partnerships, always putting our investors first. Even at the fund levels, investors get their preferred returns, or if we take $1. So we're always doing things to make sure investors are getting their money first.
Awesome. So Jim has a great question here. So talking about the lines of pricing and things along those lines, what's our plan if home prices drop during the pandemic?
Yeah, it's a great question. So first, I'd say, I don't expect to see any tremendous drop in value. So certainly the high end market. So many of us in this Zoom here today, live in nice homes, right? Live in higher end homes, and that market has never came back since the downturn. The $1 million home market has always struggled since 2007, 2008. But the homes that most people live in, the $200,000, $300,000, $400,000 home market, there's such a lack of supply. And this is only going to contract right now. A lot of builders have kind of had to slow down, a lot of less developments going on. There's such amazing demand for that housing. I don't think we're going to see a drop in pricing. And if we did, it'd be modest and it'll be very short term. So I don't see it affecting in any major dramatic way. But also keep in mind our portfolio. So in our loans, we're at 55% loan to value. Property values drop by 10%. That doesn't make any difference in our loans. In our real estate portfolio, the income and the returns we talk about are primarily derived from the income we generate from operating the properties. Doesn't matter if some analyst says it's worth less or more, we're generating the same return. We're generating the same cash flow. So it's one of the great advantages of the housing fund is if property values went down, it wasn't a great time to sell. Guess what? We wouldn't sell properties then. We know fundamentally the rents are going to stay strong. The income's going to stay strong. The occupancy is going to remain strong, which ultimately means the values are going to continue to grow.
Awesome. So let's go ahead and keep moving forward here. These are fantastic questions. Really appreciate you all taking the time here. So as far as it looks like Glenn has a question here. So and it's a great question, not only for the notes, but how do we go about determining the rates that we set and the targets that we set for our notes as well as for our funds?
Yeah, great question. So first, all of the returns are based upon, where we feel really confident to what we're able to achieve consistently in any environment. So again, that's why you look at an environment like we're in right here today. We're continuing to pay these fixed returns. We're continuing to hit our target returns because we set these returns to be achievable for us in any environment. That's why we're not missing a beat. So our fixed returns, we base as we grow. Fixed returns are essentially debt for us, debt for our funds. So we want to utilize leverage, debt conservatively, and we have to balance that at generating our equity returns and utilizing leverage and giving fixed returns. So we've adjusted over the years. We've been close to where we are today for a while, and we expect the returns that we showed earlier today will be the returns for, I would expect for the next few years ahead. We've been very, very consistent with those returns. And then our equity returns, we really set out when we launch a new fund, we analyze that business strategy, we analyze the approach, we stress test it to what happens if this happens, what happens if property values go down, what happens if unemployment increases, all these things that we're dealing with right now, and we stress test it, can we still hit our return targets? And that's how we end up coming to these returns. And that's why at the end of the day, in most environments, we drastically exceed our return targets.
Fantastic. Awesome. So now I'm going to go ahead and turn it over to Kyle. I think he has a question for you from Facebook. Cool.
Hi guys. Yeah, we have a question here from Robin. It's saying, I'm interested in investing in one of the funds. Am I able to do that utilizing an IRA?
Yes, so you can use old 401ks, you can use IRAs, any really qualified accounts, potentially even an active 401k, depending on how the plan's set up. So yes, we manage hundreds of IRA accounts. A significant amount of the capital we manage is in retirement accounts. It's a great way to invest and completely shelter those returns from tax.
Fantastic.
And I'd really quick like to remind everyone that if your questions aren't answered here live, we are going to be doing breakout sessions after the raffle where you'll get the chance to speak with one of our investor success managers.
Awesome. Thank you, Kyle. All right. We have this great question from Barclay. I'm loving this question here. So as far as rolling any new investments into our new fund. So did we, A, roll any investments into our new fund? And B, how can investors be sure that it was done fairly for everyone? And I guess the third part of the question here is, what are the total asset under management levels today across all of the funds?
Yeah, thanks, Barclay. So yes, the DLP Housing Fund that we spoke about here tonight was all of the assets in the DLP Preferred Return Equity Fund, which was our third equity fund that we launched a little over a year ago. All of those assets rolled over to start the Housing Fund. So we gave our investors in the Preferred Return Equity Fund the option of converting into the Housing Fund. And with the benefits of they'd be able to now have liquidity, they'd be able to have the benefit of monthly distributions versus quarterly. They get the benefit of having interest income coming in, giving more diversification, better cash flow management, better tax shelters. So yes, we transitioned all of those assets over, and virtually every investor who was in the Preferred Return Equity Fund chose to transition over to the Housing Fund. And what we had to do, and this was a tremendous process for us, is we went out and we had to value every property in the fund. We had to get independent appraisals done, and then we had to have our auditors go through and evaluate the valuations. So that took, literally doing it for the first time, going through 4,000 plus apartments. It took a few months to do that whole process and dial in the exact value of the properties as of the transition. So we did all that work led by Bob Peterson, our CFO. And we actually just finished that all up here recently to finalize the value of the transition of those assets and the transition of those investors into the fund, which overall I think everybody's going to be pleased and happy with how that worked out. So and then the last part of the question: what is our assets under management across all of DLP here, all of our funds? So we're closing in right around $900 million in assets today. We will break the $1 billion mark here this year in 2020, which is been pretty amazing.
Awesome. There have been a few questions here throughout the course of the chat here asking about our minimums. So can you talk a little bit about what the minimum is to invest, how we go about helping folks invest in our funds?
Yeah, absolutely. So most of our equity funds, housing fund, lending fund, income growth fund, we can do a $250,000 minimum. For our last option we covered, the DLP fixed notes fund, we have a $100,000 minimum investment. And that can be broken up. Any of our investments can be broken up among multiple accounts, IRA accounts, et cetera. IRA and cash, depending on however you have your investment structured.
Awesome, fantastic. And the other thing I just want to mention here, I'm seeing a lot of comments. Thank you all there for your well wishes, and we hope you all are staying safe and healthy as well. So I think what we'd like to do now, we'll go ahead and as Kyle mentioned, and in the chat we mentioned, if your question was not answered live here just yet, we do have breakout sessions that you're all invited to after the raffle. That we will stay on with you. Rich, Don, myself, Bob Shimanek, and Mike Krawczyk will be there as well to help answer your questions. And we'll stay on as long as you need us for to be able to get all your questions answered. So we're looking forward to that as well. So with that said, why don't we go ahead and jump forward here to the raffle. So Rich, you want to come on in and...
Absolutely, mix it up here.
All right. This is for who then?
This is for our future investors. So we're going to have one each for a current investor and one for a future investor.
All right. Well, let's see here. I can't do this here. Meg, come on out here. No? Come on out here, Meg. You choose our winners. With everybody's names in this raffle. Meg's picking here randomly. We have Rita Dower.
Awesome.
Rita Dower. So we will reach out to you directly. You do anything. You're welcome to come off mute or come off if you're there and say hello, or at least type a chat message in letting us know you're still on. and we'll reach out to you for your vacation.
Awesome.
All right.
All right.
All right, Meg. These are existing investors.
Yeah.
And we have Morgan and Lynn Faust. Congrats.
Awesome.
Very cool. So we will reach out to you directly and get you your vacations. So appreciate that, everybody. So as Larry said, we're going to do breakout rooms. So Kyle, you want to give a quick color on how that's going to happen now for those who want to stay on and get questions answered in a smaller group setting. We will do that now.
Sure. Yeah, we're gonna randomly select you out to meet with some of our investor success managers. First, here we do have some options to schedule a one-on-one. You can always learn more on dlpcrowd.com. And here's Don, Rich, and Larry, and Bob, and Mike's contact information. But without further ado, I am going to do some breakout rooms for everybody. So if you didn't get your questions answered, now's the time to have that happen.
So that's going to pop up on Zoom for them to do?
That's correct. Yeah, it's going to pop up. They'll automatically be entered into one of the breakout rooms.
Fantastic. All right. Thank you, everybody.
Thank you, everybody. Have a great night.